High risk yield farming has earned me over $4,601.98 over the past week, and I'm going to show you how here in this video. Now, ladies and gentlemen, we're talking about high risk yield farming today, so I'm assuming you at least understand what yield farming is. If not, I have an entire playlist where what is yield farming, understanding in permanent loss, APR versus APY. I'll link that playlist above. I'll put it down in the description. Here's what I want you to understand though. Even if you understand what yield farming is, high risk yield farming is just that. It is high risk. The reality is I've gotten lucky to be able to earn this much. I'm very thankful for that. When opportunities come your way in crypto, you want to be appreciative of those opportunities. I've earned this basically because the crypto gods so far have smiled on me a little bit. This isn't like trading. You know, I have trading clients and trading students that I've been working with. That is trading crypto. When you know how to do it properly, you can create a passive income, you can automate the entire process, and that is something that can be stable and you can earn literally every single day. But when you're yield farming, most yield farms profit opportunity really only exists for a few weeks or a few months. And it doesn't always have to be high risk. You can take conservative approaches. But today in this video, I'm going to show you my high risk yield farming strategy, what I've been doing, how I've done it. I'm going to show you mechanically the entire process and tell you exactly why I've made every decision that I've made. First things first, I already did a video talking about the Adamant platform. If you haven't seen that video, I'll link it above. In fact, I've done two videos. I'll link both of them above, and then I'll also put both videos down in the description. But if you love earning passive income and you love cryptocurrency, do me a favor, go ahead and smash that like button. Also, go down in the description, subscribe to our Crypto Passive Profits newsletter. All right, so let's get into this. So if you come over here to Adamant, which is adamant.finance, I'm assuming you understand the Polygon network and you're in the Matic ecosystem. But if you come over here, you'll see a lot of yield farms. In fact, they have so many. It's probably one of the biggest aggregators in all of the crypto space. When I say aggregator, I mean that they have yield farms from QuickSwap, Cometh, SushiSwap, Elk, Polyzap, KeyDAO, Curve, Iron, and Walt, more than I'm aware of in any other aggregator. But what you can do when you yield farm on this aggregator, and if you don't understand what an aggregator is, again, go watch the video in the description talking about Adamant. I don't want to recap all of that because I know some of you have seen it. What my strategy is, I really like the tokenomics behind Adamant. And let's just take a look at those tokenomics for a moment. Really, the ADDI token. Adamant token. ADDI is a native token on the platform and provides value for liquidity providers and token stakers. You can earn ADDI by using the vaults by buying it on QuickSwap. Roughly 13% of all ADDI minted goes towards development to ensure rapid innovation. Proven tokenomics. ADDI borrows aspects from the tokenomics of two of the leading DeFi platforms on the Binance Smart Chain, Pancake Bunny and Ellipsis, both of which have multi-billion-dollar TVLs, total value locked. ADDI has an emission system similar to Bunny's, where for every 1 BNB earned in performance fees, 5 BNB were minted. In ADDI's case, 450 ADDI are minted for every 1 ETH earned in performance fees. The amount of ADDI minted for each ETH earned in performance fees will decrease over time. It's already decreased once. The ADDI token does not have a max supply like Bunny. Because ADDI is only minted based on the profit generated through performance fees, that means the excess supply won't flood the market during periods of low revenue, like bear markets. This ensures that ADDI will retain its value better than most tokens during suboptimal economic conditions. This is important. Although I wish they had a limited supply, but this theoretically allows farming to continue. Stake and or lock ADDI to earn fees from the Adamant vaults. Stakers can gain exposure to the returns from the entire Polygon DeFi scene without having to manage multiple platforms and multiple farms. So let's take a look at what that looks like. And then I'm going to get into my strategy, but you need to understand the tokenomics so you can see what my strategy is. So if you come over to Stake Invest, when you mine ADDI tokens, as I've got 0.35 that I've mined here. I mine probably like 2 to 3 ADDI tokens every single day. When you mine them, they show up right here, available to withdraw. But if you withdraw now, you pay a 50% penalty. It's a huge incentive not to withdraw and to hold the token. Keep in mind, they call this vested. When you mine new tokens through the farms, the tokens are automatically vested. There's three terminologies you need to learn: vested, staked, and locked. So they're vested when you mine them in the farm. If you buy them on QuickSwap, you don't have to worry, they're not vested. Only new tokens mined on farms are vested. Once they're unvested, after 90 days, Then you can come here and stake them if you want. When you stake them, you can unstake them at any time. They are not locked. Vested for 90 days, new minted tokens from the farms. After 90 days, or if you buy them on QuickSwap, you can stake them. Again, this helps lock up the supply. If you stake them, what happens is you earn your share of performance fees. So for all the vaults, and they keep adding new vaults, I added new ones today, which is awesome. All the vaults, they automatically compound liquidity tokens. Again, I explained all that in the previous Adamant video. But there's a 30% performance fee for them doing that. That performance fee goes to all tokens that are staked, all tokens that are vested gives performance fees, and if they're staked and locked, they get performance fees. These performance fees are very high. I'll show you exactly how high in a moment. No lockup required. When they're staked, you can unstake them. The APR, you earn 13.12% in quick. This is APR, not APY. It's important that you understand the difference in APR versus APY. I have an entire video where I discuss the difference in APR versus APY. I'll link that above, and I'll put it in the description as well. This is really irrelevant. It's such a small amount. But you earn 753% in wrapped Matic, basically Matic tokens. This is incredible. This is the current earnings. The reason this is incredible, if you divide that by, 12, you're earning what? Like 50-something% of the value of your tokens. Right now the tokens, so I have 100 tokens right now. Think about 117. But let's just say you have 100 tokens. 100 tokens at $40 is $4,000, right? I get 50% of that roughly in Matic. That's $2,000 worth of Matic that I'm getting just from performance fees. That is insane. That is absolutely insane. These earnings are incredible. Then there's staked and locked. Now, locked Addy is a secret that I've just learned about and understood. When you lock your tokens, you earn the same earnings, the same performance fees over here. Plus, you earn additional Addy rewards. Where does these Addy rewards come from? And by the way, it's important to keep in mind, this is APR, not APY. And those Addy rewards come from people who claim with the 50% penalty. The penalty goes to the other Addy stakers. Right now, the Adamant platform is still, I don't know if it's even a month old yet, but 1,400% Addy tokens. That's essentially getting 100% back within a month, a little over 100% back within a month. That is incredible. It is incredible. I've actually started claiming mine with a 50% penalty. In fact, I tend to claim them anytime I've got about 0.1 over here because I want to maximize my compounding. Now, there's a reason I'm doing this. I'm not going to always do this, but the reason I'm doing, originally I thought it wasn't very smart. Why would you pay a 50% penalty? But when you're vested, they have to be vested for 90 days. Now, when they're vested, you still make the full rewards. These two right here is what you make. You get these rewards in real time, even when and you're paid at the full amount. So right now I'm earning at the point, this 0.35 plus all these tokens. But this 0.35 is the rate that's contributing to what I'm earning. Now, when I pay the penalty, lose half of these, I'll get this amount. And this amount will be the portion that's going to be earning, right? So I'm not going to be earning on the full amount is what I'm getting at. So when you pay the penalty, you lose a little bit of your earning power. However, who cares when you're making 100% a month? It basically takes like 18 days till you get your penalty back right now. And this is not going to always stay this high, but right now it takes about 18 days to earn your penalty back. And then you go from basically day 19 to day 90, and all that's going to be additional profit that you're earning. And you're earning Addy. And by the way, these Addy that you earn are not locked. And these are the Addy that I'm taking profits with. So I'm going to explain my entire process, okay? Couple of things. Anytime we're under $40, for me personally, again, not financial advice, I'm just explaining what I'm doing. All of this is high risk, and I'm going to show you in a moment several ways this whole thing could collapse on me, potentially. Right now, we're under $40, so I'm going to go ahead and buy. What I've been doing, this 1.82, I cashed that out for my profit, so I'll write it down so I don't forget. I'm going to claim all this. So claim. And the reason I'm going to claim is because I want those 25 Matic, plus I got some other Matic, about 30 Matic. I'm getting so much Matic, it's ridiculous. I'm going to save this. I'll claim this in a moment. Now what I'm going to do is go over to QuickSwap. I have wrapped Matic. I was just going to hold them, but right now Addy's below $40. So in my opinion, that's a buy. So there's the Addy there that I have, and I want to buy more. So that's going to give me 2. Now, the 1.82 1.36 or 1.825 here. That's going to be my 1.825. That's actually my profit. So I'm going to pull that out. And I'm going to go ahead and do that here in a moment. I probably should have done that first because I don't want to confuse you. I am taking my profits and sticking them in this pool right here. So originally I started out with $2,000. I've been earning on the pool, and plus I've been putting my profits in here. And I'm just buying more LP tokens. And there's a reason why. I could just take my profits out and just, set them to the side or whatever. But I want to be able to earn some of this APY. I want to be able to earn more ADDI tokens. You can look at the box right there and see how the earnings stack up. So I'm mining more ADDI tokens. I want to keep doing that. And this is going up. Like I'm getting auto compounded. So it's not just stagnant. Now the key and the Mematic, it is possible those could go down, but I'm willing to take that risk right now. Again, this is a high risk strategy, so I'm willing to take that risk. Also, the other reason I'm using this to stack my profits is because Titan Iron, and Iron from all this is tied up in the Iron Titan ecosystem. And I think this system has a very high potential to drop drastically. So I'm fine with this over here earning. The reason I'm in here is because I'm earning ADDI tokens. So I'm fine with that right now. I use about $2,500 to buy ADDI tokens. So I want to get that out. And by the way, the $2,500 came with some of my first profits I pulled out of here. Last week is when I just reset it to 2,000, 2,000, 2,000, 1,800 or whatever. So how do you add liquidity? This is a question I've gotten a lot of. So I've got 1.825 that I pulled out, and I pulled those out again from right here. These are the ADDI rewards that I get just for locking my ADDI. So this is the only place I'm pulling profits right now. These are the profits. Everything else I'm just reinvesting into the platform to increase my earnings, basically with the goal of trying to get my earnings out quicker. So we'll come over here. I'm going to add liquidity. Click liquidity. If you didn't have these up here, you'd need to pull them up, but I already have them. But I need to swap some ADDI for that key token. I'm going to swap 1.825 for this token here. Swap. Confirm. Okay, now that will go through in a moment. And then, now that I have the key token, I'm going to take this token, my balance, you got to take half of that. In order to go into a liquidity pool, you have to have half of the two assets. So in this case, I need half key, half Mematic. So watch this. Hopefully you're able to follow along here. This works with any yield farm. Like this is how you add liquidity on practically any yield farm. All right, so that transaction just went through. And now I'm going to get the Mematic token. I'll probably cover this project in another video, but I kind of like this project. So I'll take roughly half of 37.27. Divided by 2. So I need basically 18.6 to be swapped. It just went through, as you can see right there. So now that we have an even amount, ADDI, when I say even, meaning it's even in USD value of ADDI versus Mematic. Now what we'll do is we'll come over to pools, add liquidity. We just choose both of those again, ADDI. Mematic and key, sorry, not ADDI. So now we have chosen Mematic and key. And what you can do, the easy way to do this is just to click max. And if for some reason it doesn't show supply, then you may see this. One of your balances is off just a little bit. It's no big deal. Just click max on each one of those, and one of them is going to show supply. It just means I have a little bit more key than I do of Mematic, which is not a big deal. Then you click supply, confirm supply, put this transaction through. Wait for that to clear. All right, that transaction went through. Now, so what we've done is we added liquidity on QuickSwap. And because we add liquidity on QuickSwap, we have LP tokens, which is like our claim receipt. Again, go watch the playlist on yield farming. We'll come over here and our tokens show up right here. And it doesn't matter, like you'll see 24 LP tokens. People are like, well, what is the value of that? Everyone's going to be a little bit different. If you go to stable coins, it's like 0.000 and some numbers. So don't worry so much about the numbers. Click stake all, confirm. All right, that transaction went through. We'll click close. Those LP tokens are now over here. And my goal is to take this from 2,000 to 4,500. And the reason is because that would mean that I've earned $2,500 here. And $2,500, I put a little less than that in my original purchase of Addy tokens. As you can see, I'm almost there. This whole Titan ecosystem, I want to explain why I think it can be fragile. The earnings have been fantastic, but it's a very fragile ecosystem. Don't get caught up on these APYs. Everybody wants to know how are those APYs so high? Part of it's based on current prices. Sometimes it's based on projections. And quite honestly, some farms calculate this a good bit differently. Plus, you got to understand the difference in APY and APR. You just need to know that it says it's earning a lot. If you hop in here and think, oh, let me divide, this number by 365, and that's how much I'm going to make every single day, then you're currently brand new to yield farming. It just doesn't work that way. It just doesn't work that way. But what you will see happening is your LP tokens are getting automatically compounded. This number is going to grow over time because that's exactly what this aggregator does. It compounds your LP tokens. And if the price of these two assets stayed relatively the same, such as a stable coin, over time, this number, the USD value, is going to go up. And using stable coins can be one of the more conservative ways to be able to earn when you're using liquidity pools. However, using an iron as a stable coin is still very high risk. This is not like using DAI or something. Right here, USDC, USDT. The APY is quite low. Low APYs indicate less risk when using those stable coins. See, USDC and DAI, both of them are very trusted stable coins. They have a long track record of success as stable coins. So you can see that the APY is quite low. I'll touch on the Iron Titan ecosystem here in a moment, but I want to show you a couple more things. First of all, when you come here to all the farms that you're in, you can come up here and say show only staked. This is the ones that you're in only. And if you come here, you can come here and compound manually each pool if you want, or right here you can manually compound. But you see this claim invest? This is how much I've mined. You have to claim invest. And in order to claim, when you claim invest, it increases this number right here. The reason this number went up is because it automatically pulled what I had in this pool when I compounded my tokens a minute ago. So what you can do is you can come through here manually and hit this for each one. But there's another way. There's an easier way. You can come here and manually hit this. When I see about 0.1 up there, I always want to claim invest because you're not actually earning the rewards until you claim invest. What you can do is come to tools and click right here, claim all your staked vaults. And that will claim them all. Or you can come here and you can harvest all your staked vaults. Now what this does is it auto compounds all your vaults. Meaning the platform does auto compounding as well, but you can speed it up if you want and auto compound your own. So I really don't care about auto compounding. I mean, I know the system does it automatically. So that means I have to come here and do it manually, or I'll just do this from now on. Now I'm going to show you something here in a moment. Like people I think are totally missing out, or they don't understand about this platform. So there we go, 0.88. That's crazy. I mean, just a few hours ago, I withdrew one of these. I withdrew a whole Addy from here. There we go. Well, there you go. We got more. That's nuts. Okay, so I claim these and I lock them, and I already got some here from earlier because I claimed these at the start of the video. Plus, because we're under $40, I use my Matic rewards to buy some more. I'm going to claim these here. I'm going to pay the 50% penalty. I don't really care. I want them earning for me because the earnings are so high. 1,400% APR, not APY. That's just nuts. Okay, that transaction went through, and this should go up a little bit. Okay, so we'll click lock. This will increase this balance here of locked Addy. So I'm going to discuss my short-term plan, my long-term plan here, and then I'm going to discuss the Iron Titan ecosystem and why this is done so well. There we go. We got more. This is so crazy. So literally, if this APR stays as high as it is right now, I'm going to earn 120. That's crazy. And there's no guarantee of that, by the way. These numbers go up and down a lot. But the reason that I'm doing it right now is because I know this earns me Addy rewards right here. And these Addy rewards is where I'm pulling my profit. And I'm basically cashing out while still growing the liquidity pools, etc. So I now need to get, this is at 3808. This went up a little bit. So I'm going to need to get, I guess, 700, right? Yep, $700 is what I need to go. That's awesome. That's awesome. So in the short term, what I'm looking to do is get this to about $4,500, and then I'll withdraw $2,500 and send it to my actual trading account. And then I'll have made back what I put in as profit. And at that point, what I'm going to start doing is I'm going to start withdrawing some of these rewards, which is what I was doing previously. The Titan Matic and the Titan Iron, I'm going to start withdrawing some of these rewards. And I may top this off at 2,000. And I may top this one off at 2,000 because Iron probably isn't going to drop as substantial as these Titan rewards may, or these Titan pools will, the USD values. But I'm going to probably stake some here and here. And I'm really doing it because I'm looking at the Adamant platform. I think this may have a long-term future. And I know that right now, this if I move 2,000 here, 2,000 here, 2,000 here, 2,000 here, I know for a fact that I could lose a significant portion of that. These two Titan amounts, I mean, I could lose 95% of this value in less than an hour. Like when this ecosystem collapsed, there's been other similar ecosystems, and when they collapse, they can collapse very, very fast. And there's no guarantee that it will collapse, but if it does, I'm going to lose USD value super fast. So for me, I'm looking at how fast I'm earning the ADDI token, and I'm just seeing this essentially as I'm buying an ADDI income stream at this very moment. Once I get that $2,500 here, so 2,000 plus 25, so $4,500. Once I get that here, if I can get it here, then I'm probably going to start at that point leaving some of my ADDI tokens here invested. I'm just going to keep an eye on this APR, and I'll probably leave them vested. And they'll be vested for 90 days, and it's basically be like a paycheck. Whatever the ADDI price is later, I'll be able to withdraw. That's my plan for now. And it may change, but that's my plan for now. And I'll probably start withdrawing these ADDI rewards. I probably won't keep blocking them up. I'll probably just start withdrawing them. Or I may just try to run it and get to 200. Originally, I wanted to get 300, but the rewards are just so good. Now, here's the thing people don't realize. This number right here, this is one of the most important numbers, these two right here. And the monthly profits to ADDI stakers is actually almost double this, and people don't realize it. This is what makes it so sick. This number right here, the monthly profits are almost double, and I'll explain why here a little bit in this video. These profits right now, what they're calculating for this 20 million number. Now keep in mind, based on this, the entire market cap, this is basically saying the entire market cap of ADDI is 24 million. The monthly profits to ADDI stakers is 20 million. That's monthly. So if you buy ADDI today, and the performance fees and everything were to stay the same right now at this very moment, this is saying that you're going to get your money back in a little more than a month. You're going to get, most of it back within a month. Think about that. Now, if the token price drops, you're going to get less of it back. But I told you that you're actually earning double this almost, and I'll explain why here in a second. But what is this 20 million? Well, if you come over here and you look, you see auto compound key token. So they're calculating how much you're earning in that auto compound. Your ADDI rewards not compounded. That's important. So they're not even talking about your ADDI rewards being compounded. And then your auto ADDI fee sharing. So that's this amount, this little number right here. You need to claim it daily, but they're saying if you claim it daily, they're projecting right now that that's going to be 4,755% a year. And that's APY, not APR. Again, there's a difference. However, what they're not calculating right here is this. And when I found this out in Telegram, I was just like, what? They're not calculating this at all in that APY percent. Right now, you earn over 100% in a month. Ladies and gentlemen, I'm not telling you this is going to stay stable all month. Yield farming is just that risky. Keep in mind, the name of this video is high risk yield farming. But when you're earning a high percent and you're able to start cashing out quickly, then you're literally decreasing your risk every single day. So if you were cashing out your rewards every day and say selling them for Matic or USDC or whatever, selling your ADDI every day, then you are going to get back your returns in about a month. But then when you include these rewards here, it goes up exponentially. Now, in order to get these rewards, it's true, you got to take a 50% penalty, then you got to lock them up. So it's probably not quite 200%. But keep in mind, when you lock those tokens up, you're still making this right here. You're still earning the same thing. You're still earning these Matic rewards. I mean, it's just crazy. Even without compounding, the performance fee alone, again, this is APR. So basically 12 divided by this number. 63% a year in Matic. Now, what's going to be interesting long term is how this whole system holds up. I suspect all of this to dip. I suspect the Matic price may dip for several reasons. One is that there is an unlimited supply, even though they're only minting them based on the amount of performance fees. So there's a controlled mint occurring, and they are going to increase the amount of performance fees necessary to mint more. But still, I think over time, even though all you got to do is look at something like Pancake, for example, the cake token. Over time, that thing's seem to trend down, and I think that's going to continue to happen here. But it doesn't matter because you're going to be able to farm them and stake them, and that's going to be cool. But a significant amount of the performance fees are coming from the Titan Iron ecosystem. These are the highest earning rewards by far. Look at the APYs up there. That's sick. I like that they include the APRs now. That's incredible. But if you come over here to the Titan ecosystem, basically what you need to know is Iron Finance is attempting to create a decentralized algorithmic stablecoin. So you may not know this. Most all stablecoins are centralized. USDC is centralized. USDT is centralized. True USD is centralized. They're all centralized. There's a private entity that controls them and monitors them. There's so many problems with that. I don't want to go into it, but just know it's not good for the crypto ecosystem long term not to have a decentralized stablecoin. So Iron is trying basically another method. They're not the first ones to do this. There have probably been a dozen different reiterations of this. They've added some mechanics to hopefully help it be more successful. And to their credit, they have been successful at maintaining their peg for the most part. The Iron is supposed to be pegged to $1. They've maintained this peg on the Binance Smart Chain ecosystem for the most part, losing it occasionally. The single biggest risk to all these stablecoins is when this mechanic here, and I don't want to go into all the details of how it works, but basically over time, this token price here could drop significantly, and it could drop fast. And when it drops very, very fast, that's when Iron loses its peg. Now, there are mechanisms in place that are designed to cause people to want to buy back that Titan and basically help prop the price back up long term. You just need to know that most often when this price tanks, this is where most algorithmic stablecoins fall apart. The Iron token will lose its peg statistically, and it's not going to recover statistically. But the good news is this has so far worked effectively on the Binance Smart Chain. And on the Binance Smart Chain, they have, instead of Titan or Titanium, they have Steel. And Steel did go all the way up to $35. It collapsed below $1, but Iron was able to regain the peg very, very quickly, and it's maintained that peg. As long as it maintains the peg long term, I mean, I think the APRs and APYs are going to go down, and performance fees will go down as a result. But that's not the end of the world. You're going to lose some USD value because part of your value of your pool is based in Titan. So you're going to lose some USD value. So if you're worried about that, then you want to take profits, right? That's why I'm going to probably take some profits a little bit later. I've already taken some profits. You know that. I've pulled profits out of this already. I haven't tracked my total profit. In this video, I said that I made $4,601, and that's come from, I started last week, not even Monday of last week. I started last week, somewhere in the middle of the week. I put this pool at 2,000, this pool at 2,000, this pool at 2,000, this pool at like 1,800 or whatever. It could have been even lower. I may have earned more, but I don't want to be misleading. This is what I've gained since those numbers. That's where I got that $4,601.98 at the start of the video, and it's obviously changed since then. So do I think the Adamant platform can stand the test of time? Do I think it's here to stay? It's probably here to stay. Oh, we're back up. That's good. It's probably here to stay. I just don't know what the token price is going to be. I don't know what the rewards are going to be. All I know is at this rate, it's high risk. I'm able to buy some of the tokens. I'm almost pulled out. Hopefully within the next 2 to 3 to 4 days, I'll have $4,500 here. I'll be able to pull out everything that I used to purchase Addy tokens with. And then I can start pulling out some profits out of here if I want to. I'm not too terribly worried about that for now. I'm probably going to start putting more in some of the much more, stable coins, just because if I'm going to hold some USD value, I might as well hold it in something that's going to earn me Addy tokens. I really like the token. I really like the tokenomics. And I am bullish on the project lasting long term. Like I think they're in the middle of getting a CertiK audit right now. That should come through sometime in the next week or two. So I am very bullish on the fact that the platform is going to be around. I just don't know how profitable it's going to be, and I don't know what the value is going to be. I don't know what the performance fees are going to be. All I know is I'm trying to get my initial investment out, and then I hope to ride this platform for a good bit longer as well. Hey, thank you so much for watching. If you learned anything in this video, do me a favor and smash that like button. Again, if you want to learn how to earn passive income, go down in the description, subscribe to our Crypto Passive Profits newsletter. Ladies and gentlemen, this is Crypto Wealth. I love cryptocurrency. And if you love cryptocurrency, hopefully you're a subscriber. Decentralized cryptocurrency, in my opinion, equals freedom. This is Crypto Wealth. I'm out. So just to give you the recap of the quick version of my entire strategy here, I went into some of the highest risk yield farms. I'm mining fresh tokens, and every new token that comes out, I'm currently taking those tokens, I'm cashing them in, I'm paying the 50% penalty. And when I pay that penalty, I'm putting those tokens, I'm locking them up, and then all the rewards that I earn from the locked tokens, I'm withdrawing, and I'm cashing those in, and I'm putting them back in this liquidity pool right here. It seems to be stable, at least stable for now. Again, this is a high-risk strategy, but the ultimate goal is once I get this to 4,500, then I'll know that I've pulled all of my money out that I put in to purchase the Addy tokens that I purchased. Now, my Matic rewards are significant. Obviously, I broke all those down in the video already, but these Matic rewards, I'm using those just to buy more Addy tokens when the price dips below $40. That is my current number, and that is my current strategy. And if you've watched the entire video, then you've seen the full breakdown. Hope that's been helpful for you. Until next time.